Good morning, everyone. Can everybody see my screen and hear me okay? Check on one, two, three. Okay, excellent. We're going to get going right away. So welcome. This is the pre-market session trade plan analysis for Wednesday, September the 24th, 2014. My name is Doug Kay. I am the founder and head moderator of this chat room. We've been around for over 5 years now. If you're interested in checking us out, we get together each morning in this live room, and I go through my analysis. I don't know why I can't do this, but you can send me a Skype request at Doug_McKay. End of the month, we will have the new chat room using Omnovia as the service, which will be a lot better. And started the new live room. It's just signing the lease to the new office today, and we will be moved in by the end of October. Now, I did make an announcement in the room that one of the members is coming up on the end of October to Toronto, and that's on the 29th and 30th. And I thought if he's coming, maybe some other people might want to come up and we can do a get-together. So if you are free, love to have you come into the new office, come visit me in Toronto on the October the 30th. That is a Thursday. All right, so we got to get going here. Lots to talk about this morning, but before I do, I have to put the disclaimer in. This information is for the purpose of educating members who want to expand their knowledge in business trading. It's not for trading or investment advice. You and only you are responsible for trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody here is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see are for education purposes only. Please trade your own due diligence and your own trade plan. Okay, so let's talk about a couple things. Let's get the news out of the way. We've got European news coming out at 9, but the big news today is going to be the new home sales. Previous 412, projected is 432, and that will pretty much set the tone for the day, I believe. We've got crude at 10:30, and then we've got just after noon Eastern time, we've got another Fed member speaking, member Mester will be speaking at 12:05. I don't know why they picked these weird times. Can they not pick 12 o'clock, or does he have to speak at 12:05? I don't know. Anyway, let's take a look at where we are in the overall trend. I saw that one of the members posted the sky is falling, the doom and gloom, and the market is ready for a major crash. Hey, it may be. We don't know. But let's look at the facts. First of all, we are nowhere near close to violating the long-term upward trend. The monthly, we've still got great slope, great separation, and we're still trading near the all-time highs. The trend is not violated on the monthly. On the weekly, we're coming down and we're testing this 9 EMA, but we're not even close to violating the 20 SMA. We are losing a little bit of slope and separation, but we can very easily come down like we did here, and like we did here, like we did here, and bounce back up and continue the trend upward. So weekly is not showing a downward trend yet. On the daily, we've got a little bit of weakness coming in, a little bit of a start of a downward trend. So far, we've got a possible Mr. Sneaky with a bit of a technical gap. Tech gap would bring us up to that 1985, 86 level, but we are seeing a little bit of weakness coming in on the daily. Going over to the geometric chart, yesterday we were watching if we broke this trend. I took the downward sloping fork out because it got violated with this move up overnight. But I'm going to start working on it. I was looking at it on a 30-minute or a 4-hour, and I still can't find a decent-looking downward sloping fork. But we are coming up to test the center line of the intermediate upward sloping fork. That's going to be at that 1980.25 level. That's still going to be a very important level for us. If we break above that and we hold above that 1980, a good target for the day to the upside, if we get a big rally, is 2002. That's our week open. I don't think we're going to get there personally, and we are coming close to the end of the month, so we've got to start looking at whether or not we're going to get into critical mass. Of course, the key level for me today is going to be still at that 1971.25. We went down and had a low in the ES yesterday at 1971.50. We didn't break it, and that's a good thing. And because if we do break it, I'm looking for that bigger move down to that 63. Now, we did breach it in the overnight trading. Our overnight low is down at 1968.25, but we've since popped back up, and there's a couple things I'll show you on the composite chart. I want to do something a little bit different. I'm going to start with the Russell this morning, simply because this is something we've been talking about, and for weeks now. I said that if we breach, if you can't see it now, but there was a very key CLVN at 1140.60, and we came down last week and we were challenging it. And as they were battling that zone, they shifted the VPOC, the microcomposite VPOC, down for last week, down to that 1140 area, right where we said that we needed to hold. I was very clear on this. On a couple different levels. I said if we breached that level and we could not hold and stay above it this week, that we'd likely have a bigger move down to the test the lower side of the value area of this accumulation zone, but more importantly come down and test this 1111.60, because that is the composite and the most traded price going back to October 2013. And yesterday, where did we go? We came down. We fell out of that balance. We breached the key level. I thought we'd chop a little bit more in here before coming down here, but I said if we break that 1121.70, sell into that 1111.60. I hope somebody took advantage of that. I've been talking about that, and I've been begging you guys to take advantage of that move, because it's not often that you get a break that has such a powerful magnet to trade towards. And it was a beautiful setup. It was a beautiful trade, and hopefully somebody took it. Currently, right now, we're trading in around 1116. Same thing goes for today. If we fail to get back above this 1121.70, I think we're going to get some rotation today in this 1111.60, 1113.90 area. And bounce back and forth as we get a rotational day. If we do get above this 1121.70, I'm not anticipating to go very far to the upside today. Of course, new home sales could give us new stimuli and reprice the market, but there is a possibility we get stuck in this wick and we chop around just above or even around the 1121.70. So be careful today on the Russell. It's going to be choppy. It's going to still have a bias towards this 1111.60. I don't think we're going to get away from it that quickly. But if we do get above 1121.70, the first target where I'd be targeting is this 1123, 1124 area. Possibly even up to the 1126, 1127 area. I'm not anticipating much more movement than that today. And my main hypothesis is we chop around between 1121.70 and 1108. If we do break 1108, then we're going to see some further weakness. I think we do get capitulation. I think we start to see critical mass for the month kicking in. Our month open on the Russell is 1171.10. So look at the number of days left. Look at your average true range per day and see when we're actually going to hit that critical mass. I haven't had time to do it. I am going to do it this morning, and I'll post it in the room where I think and when I think we'll hit critical mass. And just for those that don't know what critical mass is, as you come into the end of the month, you take a look at where the month open is. And our month open is 1171.10 on the Russell, and what has a tendency to happen is when we get to a point where there's no way that in this case, the bulls can get us above and give us a positive month. A lot of times they'll step to the sidelines and the sellers can take over and we can get a bigger move down. And that bigger move down, I would say, is likely to happen if we breach this 1108.10 CLVN. I think then you're going to be looking at coming down and testing the 1100s, if the 1100 level, if not coming all the way down into this 1092, 1094 area. So just do your calculations, how many trading days we've got left, and watch for that to happen. So let's take shift over to the ES. And you can see that, kind of the similar situation, but it's a little bit different structure. Yesterday we were watching this 1180.25. That was our key line. We had the two areas when we opened. We had sorry, not 11, 1980.25 below us. That was a key level to hold. And then we had the 1982.50, the range low from the prior day. And we kind of fell down. We went down to that 78.50 area, and they rallied us back up through the 80.25, and then all the way through 82, and then we got up to the high yesterday at 88, and then they started selling off, and we sold off, broke through, and the key where we were looking to go was that 77.25. That got breached, and then I posted late in the day that we had put in a week low, and that if we were to breach that, we'd likely go down into that 1973.75 area and possibly test 71.75. The key level on the Russell below us is that 1108. The key level on the ES is the 1971.75. If we get below this 1971.75, we did breach it last night in the Globex, or tonight in the Globex, and we got down to the 1968.25. That will not hold this next time. So if we breach that 71.75, sell, and keep one running with the indication that would likely rotate down into this double distribution in around the 63.25 and 59.75. 59.75 is going to be a big key level, and it still does not violate the overall trend. We don't even start to violate that overall trend until we get down into the 1800s. So we've been expecting a move down. I don't think that the the highs are in yet. I think this is a bit of a retrace, and it could even continue down to this 1959. But the key level right now is this 1971.75. We do not want to breach that. We get below that, we're breaking out of the balance that we're in right now, and below the microcomposite value area low, and below a key CLVN, and we've got a big destination trade. This is kind of like the 1111.60 on the Russell. It's not a composite. Our composite, okay, going back to that October, is all the way down in this 1850 level. So we're nowhere near coming down to the composite, but it is a very big key level here. This 59.75 is the microcomposite VPOC going all the way back to the the breakout of May 26, and then this big balance area in between. And it's pretty toothy on the composite. So if we do break below it, I'm expecting a bigger move. The level above us right now is going to be 76.50, but I'm actually going to use 76.25 and 75.75. We'll get to that in a minute. But if we do get above that, then I'll be looking for a move towards the 77.25 microcomposite VPOC again, with resistance coming in above us at the 1980.25. What was support becomes resistance. It is a key CLVN. It's also the microcomposite LVN between the two distributions of this microcomposite that we've come back into and are trading around. The overall microcomposite right now that goes from the 819 through to yesterday is up at 1987 and a quarter. I really, don't think we're going to get there today. I really think we're going to get more of a rotational day inside between this 1980 and a quarter and 1971.75. My secondary hypothesis is if we break that 71.75, we get a downward continuation of the downward move and continuation of the price discovery down for buyers down into the 63 and a quarter and 59, 75. So let's take a look at the overnight, start moving our levels and put our trade levels and targets in, our ES Globex. So right now we have a high overnight of 1978.75. We have a overnight low of 1968 and a quarter. And we have a VPOC right now at 1975.25. All right, and we're trading right there right now. So how can you pick a spot right here? It's very difficult, and sometimes the market just doesn't give a structure that we want. I think we're going to see the market come down and take out the naked close here at 72.50, but there's really no trade to the downside unless we reject off the 77 and a quarter in my mind. You can use the 76 and a quarter. This you've got 75.50 here, and then on the ES Globex, you've got this 75.75 here. So if you need an interim level to trade off of and you don't want to be patient, this would be where I do it, right here in the 75.50 to 76 and a quarter. Don't get long until we're above 76 and a quarter. Don't get short until we reject 75 and a quarter. So you've got that 1 point range right now that is kind of a slush zone and a no-go. Personally, I think the safer trade is to wait until we come down here and test the 71 and a quarter and either pick up buyers and reject it and rotate back up to come up into test the value area low, or we break it and we go and take out the overnight low and hit our first target below range and below value at 67 and a quarter. So what I would do is trade off of these two levels, which would be the value area low and the range low. Aggressive traders can trade off of this level. But remember, get in, get scaled before you get to 77 and a quarter, because you could see responsive sellers stepping in. You've got the microcomposite VPOC right there, and you've got the value area low. Above that level, then if we haven't taken out the overnight low, then I think you got a really nice trade into the overnight high at 78.75 and a possible move and continuation. The first resistance above is going to be that 80 and a quarter. And anything above 80 and a quarter, you got a beautiful setup into the naked VPOC, 82 and a quarter, and the range low from Monday, and probably continuation. There's really not a lot up here until we get up into this 85 and a quarter, but I'm actually going to use 85.75 because that's the value area high up here, and then a break above that. Then I'm looking for that move up into the 87.50 area, which would be my first target above the value area. So target 87 and 87.50, and then above that area you've got 88 as the range high, but I'll be looking more at this CLVN at 88.75. So I'm going to use 88.75. And then a break above that 88.75, it's all about this 92. So the target above range and above value today is this 92 CHVN. And once we're in there, you really don't have anything to hold you down until we get into this 95.50. Now, you can see that this 94, 95 area is lining up with the 95.50 longer-term microcomposite. So you've got this, this in-term balance area within the longer-term balance area, and both the value area highs are lining up there. So I would be using that 95, I'd use the bigger one, 95.75. And then above 95.75, I think we get the rally and the continuation up to test the 2,000. And above 2,000, we've got our week open at 2002 with the naked VPOC at 2,250 and the naked close at 2003. Remember, our month open is at 1999. So, in fact, I'm going to move this target just down to 1999 to coincide with our month open. And I think if we get it up there, 2,000 is not going to hold, so you might as well just stay long into the 2002, 2003 area. To the low side, everything below 71 is the takeout of the overnight low and back into that target at 67.25. Why 67.25? 67.25 was our microcomposite VPOC in the September contract, which shifted down to this 59.75 area. But targets below, and to me, I wouldn't even think of trying to catch a falling knife at this point in time. If we get below that 71.25, look for continuation short at 63.25, and I hope you're all short at that point in time. Now, if you ever want a great short, take the short here, okay? And targets below are going to be the 63.25 and the 59.75, and really don't have any real support down on this lower end until we get down to this 53.25 area, and that's where I'd be looking for responsive buyers to excuse me, step in. And if we do breach that level, then we're going to get a bigger move and the target down below us. It's pretty toothy on this level. You've got a little bit of support here. You've got a target at 51. Support at 48. 48. And anything below that, I'd be targeting this 37.75 area. And, you know, then we can look at the possibility of coming down and testing the lower 1900s. Anyway, that's what I'm looking at today. Not expecting much. My main hypothesis is rotation between 71 and 80. If we break that 71, my secondary hypothesis kicks in, and we get a move down to the 67.25 with continuation down to 63 and 59 area. Let's take a quick look at what it looks like on the Renko. You can see that the Keltner center line is 74.25 right now. If we break below that, a move down to the lower Keltner line is going to be 68.50. By the time we get there, I will bet my bottom dollar at 67.50. If we stay above the 74.25, test of the upper Keltner is 80, and I bet you it's at 80.25. So these are, you know, the Renko with the Keltner is, you know, lining up perfectly with the levels. Gotta love it. And then let's go take a look at gold. Gold is doing exactly what we thought it was going to do. It's just going to chop around in this area as we mature the auction. 1223 is current price acceptance. We do have a minor CLVN, but I'm going to take this off now at the 12.18.25 because we've breached it a couple times, and it's all about this 12.10.90. If we don't hold 12.10.90, this is going to be a nice short as well into the 12.06.40. So watch that 12.10. You know, other than that, I think we're just going to shop around in this area with a little bit of an upside bias to this 23. There's really no real trade to the long side that's safe in my mind until we get above the 27.25, and you know, you could get 29.30 out of it, which isn't a bad trade. If we get continuation, maybe up to the 12.35.30, but I'm not expecting that today. I'm expecting chop in this area as they try to determine where fair value is in this. This area is kind of, you know, it's got no real price value until you get up into the 12.23, 12.25, 12.24 level. So that's why I think that if we can, you know, hold in this area, we've got rotation with an upside bias. Maybe use the, you know, the 12.17.40 microcomposite value area low, but it's not a safe trade, and I don't recommend anything that's not a safe trade in here. But if you want to be aggressive, if we break this 12.17 20 area, then you might want to take the short into 12.10.90 with a continuation, you know, down to the 12.06 area. Not, I wouldn't try to take the long off it personally. I would only take the short. But you know, sometimes the market's just not going to give you where you want to trade, and those are the days you just have to stay on the sidelines. Anyway, that is going to be it for me today. As always, trade well, trade safe, and we'll catch you on the flip side.